Trader family. So we're gonna talk about price action today. Just strictly, just talk about charts. Okay. So you got how you guys could look at support, how you guys look at resistance. Okay. I did other videos already so far with technical entries, stop losses, and take profits. So after this video, go through that. But it is very key to understand market structure. All right. Market structure, price action, support resistance, supply demand. It's all the same stuff. It's just all price action, right? At the end of the day. But some people like to word it differently just to make themselves sound more unique and different. But it's just a way of just different terms, just so like other people could sell stuff, right? So understand that price action is good. And I'm pretty sure a lot of you guys have been taking price action courses and all of this stuff already. So I know most of you guys are very good when it comes to market structure, right? So let's just come down. Let's go to the higher time frames, which is a good start, right? Because just understand, like when we're looking at the higher time frames, the 12-month, 5-month daily time frame, it's just each candle, it just takes up that amount of time, right, to form that whole candle. But when I like to look at support resistant areas, right? The higher time frames are really good because when we approach a certain level, right, on a higher time frame, it just gives us a higher probability that the markets might do something at that zone. So when you see we are approaching a key area of support, right? In a support, I like to look at the bodies of the candle close above a certain zone, right? Because that's showing me that this area is significant, a significant price point. That price is rejecting that zone for a particular reason. So if we continue to reject it, this support could be a good area of interest where you could be looking for a potential trade pretty much, right? You could be looking for a buy or even a sell because it's a higher probability that we will get more volatility, a certain type of bounce from that key level. Make sense? So when you're able to identify it, like you want to look at current market structure and it forms for all time frames, right? The higher the time frame, the more significance that area has, right? Either from rejecting or from breaking from it. So when I see these zones, right, also in the daily time frame, I mean, on a higher, looking at the resistance right here. So we can see that level of rejection. I like to call the bottom the floor support, the high, right, resistance. Okay. How we could see if an area is rejecting that zone, you look at the candle bodies, not the wick, the body of the candle closure. So imagine every time we hit here, we reject, we push lower. So imagine those opportunities, right? So every time we hit that area, that's why I want to set an alert at key support and resistant areas because there's a higher probability when we hit that zone, we can either push lower or away from it, or we could break out of it. And when you break, it's just like a rocket, right? We're just seeing price just move away from that type of reaction. When I look at this too, I consider these like order blocks. But these type of market structures that is forming, it does this on every time frame. The higher the time frame, the longer it takes to develop. But if we take away the daily and we look at this in the 5 minute, the price, the candles are the same. It's just each candle is moving every 5 minutes of a closure, right? But the market structure is pretty much the same in all time frames and pretty much all pairs. So how you could identify also, right, is we already went over support, we went over resistance. So it's very simple, right? Don't overcomplicate it. You can do this at every time frame. You want to mark off an area of resistance where price is rejecting over and over again, an area, not a specific number, but an area, right? An overall area. And when I see these areas, right, I just like to put my rectangle like chart, but I just use this for an example. And I like to just mark off the area. So when price finally hits that zone, right, even this area of support, right? When price hit that zone, that's when I'm gonna start paying attention to the markets, because it's gonna show me it's a higher probability if we break lower, it's a higher chance it's gonna go in that direction. We break higher, it's a higher chance we're gonna go in that direction. All right. So that's what support and resistance is. I know some people like to look at higher highs and higher lows. You could use moving averages, but if I'm looking at this chart, I could already see that we're just making higher highs and higher lows, right? We could see that market structure is forming higher. Now, if I go to the 1 hour, right, we could just see price action is just doing the opposite. So, one of the key things, right, is understanding breaks of structure, right? Because when we get a break of structure, it tells you that the markets is having a higher probability in moving within that direction. That's why it's very important, right? We got this area of resistance. We didn't break, right? But the moment we broke below a key area of support, because we could see we tapped this support 2 times, we tapped this resistance 2 times. But how come the markets fail to break higher here, but chose to push lower there? It was because we broke structure, right? So that's price action. We're seeing price is breaking structure. And now that's just giving us more confidence that the price wants to push lower from that area. So this is why it's important to draw your support and resistance zones so you could just see price action, right? When we're around those key areas, it's just a higher volatility that we're going to push in a certain direction. So the moment we start breaking lower, right? And this is where we could start identifying price is making lower lows and lower highs, right? And then when you go to the lower time frame, it's going to show like those little pullbacks, and price is just like doing stuff like this all the way lower, right? We form the resistance again, and then what happens with price? We break a area of support, right? You get a retest and price pushes lower. So this is bearish market structure for the moment, right? We can see that this is bearish market structure. When we see a shift of structure, right? Because most people would just start buying immediately. Like people would buy right here and then they would get stuck in this and it gets pulled back. I like to be patient because I want to see like a key area of support and resistance get broken before I could identify a shift of structure, right? So the fact that we're forming this area here, a clear area of resistance, what do you think if price broke above this zone? Wouldn't it be a higher probability price might do something like this, right? Or you could be a little more patient if you want more confidence. You could wait until price breaks above this resistance, and then we could go back into bullish market structure, right? Because now when we're seeing that low formed a lower high, that we made a low, that breaks structure again, right? Breaking here, that's the break, that's making a high. Now we can see the shift of structure. Now we can see, okay, what is the reasons behind it? But we just only focus on technicals. But this is how market structure could show you what direction it wants to go by looking at the breaks of structure and then understanding the direction of the markets, right? So I think that is very key to really get good at, because most people would try to enter too early, right? Some people would just enter here and it's not finishing the cycle yet. But once we break above here, now's a decision maker, right? Either we're going to see price repeat, like aggressively push higher from here, or we're going to see price reject and then give us another low to form, right? So just wait for the stages, okay? When you're looking at market structure, don't let it confuse you. You know, don't let people try to confuse you. You want to see, what is price currently doing? Are we making higher highs and higher lows, or are we making lower lows and lower highs? Do we see price breaking below key areas of structure or key areas of support, right? Right here's a perfect example. You see this support, right? We held this support. Why price is not pushing lower? Because price action is not proven to us that price wants to break lower. But how come price broke above this resistance and then we continue to push higher, right? So when we break structure in a particular direction, it's just giving us more conviction, a higher chance that price is going to go in that direction. All right. And just looking at the markets, right? The higher the time frame, the more conviction those areas have, right? The lower the time frames, right, the less conviction. That's where you get caught with the fake outs. You get caught with all the noise, these wicks right here, right? Because in a 4 hour, I know that this is an area of support, but you could get caught with these wicks in the lower time frames. So that's why it's okay. It's better to like use the 1 hour and probably the 4 hour to 1 hour to mark off key areas of support and resistance zones, key areas of breaks of structure. Like the reason why I don't use trend lines is because it's good. It makes your chart look pretty, but just because like most people would enter here at this break of structure, right? Because it broke the trend line. But I want to see price breaking above candle structure to prove to me that it wants to go in that direction. Because how many times that you could get a break of structure in a trend line and price would do that and then just drop again, right? So that's the only reason why I don't use it. But you could see just by looking at it, price is making lows. You don't need a line to show you that. So it's easier to make your trading easier. Like I just like to keep it simple. Support resistance. If you want to use fibs and stuff like that, that's totally fine. Whatever fits your strategy. But what gives you more confidence after the price action is the reasons, right? Because if we see sells that's playing off on gold, why is gold pushing lower this week? Because China and the US had positive trade talks. So understanding that first and then looking at market structure to prove to you that the market is following, we could clearly see every single time we see gold break below support, it gives us more conviction on top of news headlines. Every single time we break below a support, right? Gives us a direction, and then the price action confirms the direction, right? So the news is giving us the direction. Then we can use price action for our entries to go within that direction. And then that gives us more confidence that we can have in the trade. All right, guys. Hopefully this is helpful. Want to make it quick, very simple. Don't overcomplicate it. Like very simple support resistance, mark off your zones, and then you just do this to recent price action, which is what I do every day in a private group. You know, market updates, we just focus on key levels, right? Because for instance, right, if a news headline, if I know that this is an area of resistance, and say an example, China comes out and says you like China goes against their rules, right, of tariffs. We see gold break above here. That's a conviction level, right? It's a higher probability we're going to break that resistance and push higher. What gives us the confidence of that trade? We could enter at the break of structure. The confidence is because of the news, right? And opposite, what happens if they actually signed the agreement? We could see gold break below this level of support. That's our entry. Price pushes lower. We break below support. We have reasons to enter because of price action. And then we have the conviction to hold the trade because of the news. So that's all you really have to do, right? To make trading simple, right? I like to identify something like this to the left as an order block, right? Because as soon as we break structure, you see the candle closure. The moment we close below structure, it is a higher probability, right? The markets is tend to go within that direction for that moment. Because if gold wanted to break higher, it would have broke above resistance. So the fact that it hold and then break lower, this is what gives you conviction that price is going to push lower. All right. So that's just really it. You know, I don't overcomplicate my trading. I make it very simple. And hopefully this helps you guys as well, making your trading career a lot easier. Hopefully this video helps. Please give me a like. Also subscribe, hit the notification bell so when I go live, if you guys are interested in the private group, everything is within here, guys. We went live. We go live for all the rate decisions. You could just see just the ECB rate decision. We went over hawkish and dovish scenarios. You could just see the testimonies in the private group, guys. Like these guys are just killing it. You could already see like made $5,000 already. You could just see also is live. So 6,000 in a day, insane. You can see another guy made another $6,000. You could just see like right here, you could just read this, man. He just joined a private group and to shift the way that he looked at the markets, right? So if you want to speed up your process, 2 wins today. So if you want to speed up a process, guys, this is just the best place to come to, just to come to the private group. Member Spotlight. We got very successful traders. I update this every week to show how members are killing it every single week, showing the transformation so they could help others succeed. I want this for all you guys. If you're interested, link is in the bio. Have a good one, guys.